Taxes. No one likes paying them. And when you sell your house, you might get a lot of money in your pocket. How do you know what you have to pay for taxes? Well, let's talk about it. I'm Aaron Chadbourne from Demetrius' team, the Real Estate Group, and our team has the experience to help you navigate any real estate transaction. Obviously, I'm not a tax professional, and you're going to want to talk to a tax professional or accountant for any advice on paying your taxes and for which exemptions might apply for you. And one that you should ask them about is the capital gains exemption on your primary residence. What does that mean? Well, when you sell a piece of real estate is an asset. So the federal tax code looks at the way that real estate is taxed based on the gain. The gain means how much you sold the property for minus what you paid to acquire it. In the US, the tax code allows an exemption that if that gain is less than $250,000 for an individual or $500,000 for a married couple, then you might qualify for that exemption. That means that you wouldn't have to pay the federal capital gains tax or the state income tax on that amount. What are some of the conditions you have to meet to be able to get that exemption? Well, first and foremost, it has to be your primary residence, and you had to have used it as your primary residence for at least 2 out of the last 5 years. If you only live in it part-time, you need to keep track of when you were living there and make sure that you reach that 2-year threshold within the last 5 years. Number 2, it needs to be your house, where you live, your primary residence. If you've been renting it out, using it as a business, those might be complications you want to talk about with your tax advisor. Also, you can't have sold another primary residence and used this exemption within the last 2 years. But for a lot of people, if you've lived in a house for more than 2 years, it's the only primary residence that you've had, and your gain, the amount of money that you're making on selling the property is less than $250,000 or less than $500,000. And by the way, in the appreciation in real estate prices in the last several years, a lot of our clients have a great amount of equity. Sometimes it surpasses those numbers and you get exemption on that first amount, the first $250 or the first $500 for a married couple. And that's not a bad problem to have too much money that you've made as a result of investing in real estate. But we don't want you to have to pay more taxes than you need to. So we want to make sure that you're looking at the exemption on capital gains and talking about it with your tax preparer. If you don't have a tax preparer or a tax professional that you trust, give me a call. We'd love to give you the names of several that we work with and that we know can help advise you. For Demetrius' team, the Real Estate Group, I'm Aaron Chadbourne.